Over the past few weeks, we've been talking about potential pump all the way up until 2930k. However, as we look to the left, we saw that it was previously resistance. And there was a moment back in June where we did pump through this resistance. However, on the return to flipping it from resistance into support, we can see price lost it and confirmed it as our top. So this was the false high. This is our true resistance. And we can see after the most recent dump in the last couple of weeks or so, there was a potential change in path. Now, before this pump up, we saw this bullish divergence, which I had called on the channel. We were suggesting that we would see a pump potentially all the way up to 30k ever since down here. Now, the reason being is we saw there was a key level of support being held for multiple weeks in this area between the month of August until the September. So a whole month period we were over here, and we can see that we range broke out of this support. So that essentially means we're now trying to get this downtrend continuation. We saw a big dump, however, with that daily candle close actually closing above this yellow wick over here. In fact, actually closing above that body, but I'm more concerned about whether this body closes below this last wick of the range. And as it did not close below, although yes, it confirmed a lower low below this point, it wasn't lower than this. In fact, it was higher. So you then call this point over here higher low, a higher low that's higher than this previous low. Sorry if you can hear my dog, she might make some sounds, she's a pug, and she's drinking water. Apologies. Oh yeah, I forgot to say, please don't forget to like, subscribe, comment and share this video update. But yeah, coming back to this bullish divergence, because we failed to break beneath this $24,700 wick, this is essentially considered higher lows. So at that higher low point, we had a bullish divergence, and as we're failing to lose this support, where is our range high? That is 29 to 30k. So the most likely scenario is now that we're trapped in this range bound market, that we go ahead and meet the resistance right at the top. And then over the last week or so, let's go to the date exactly, the 20th of September, we got a rejection at a point of resistance. And you can see over here, we were saying right now, if we want to invalidate this potential death crossover here, which would be this orange and white one crossing over, forming a bearish cross, the only way to go ahead and invalidate this is a push through them, and that will basically form a slingshot motion to form this EMA repel, because the moment we're crossing over as a bearish cross, we continue with this downtrend. But as you can see, we push through. If I turn off all the drawings over here, let me try and do that for you now. Just like that, we can see that these lines, this orange and white line, had almost crossed over, but you can see it actually failed to form that bearish cross. So you continue in the bullish cross, and for that reason, that's why you get this slingshot motion in the upward direction. And we've gone ahead and met the targets that we were speaking about in last week's video. What we were then suggesting in last week's video is that we need a close above this 786 fib, because it's like that final layer of defense. This could still send you back down, because we're using the fibs here, right? It's giving us targets to the upside, but in reality, you're measuring this push down to find where is the resistance, and from that point you're meant to continue lower. So that would have been in the video as well, but I also talk about the other scenario, which is a push above this would give this pump to 29-30,000, and we met the first sets of targets over here at the between the 1272 and the 1618, and now that's been met. As we are on the daily time frame, I need to see a daily candle close above this point. Right now we've got a wick rejection, but please do understand that there's majority of the day left, still 12 hours as of recording this. So for that reason, if it just means that it's not going to be at the same price point of 28,265 in 12 hours time. This is going to continue to move. We could head over to our final targets. We could continue this wick rejection. So if we do close below this, and we're getting the wicks as we are right now, and we're closing below the 1618, this could be a time where we start to come back down to test what was previous resistance, now support. Now you can already see over here we are rejecting the 1.272, so I'm going to scale down to the 4-hour time frame to see how this played out. So in fact it came down first rather than going up and then coming down. Can you see that? On the daily it looks as if maybe you hit that and then you've already come down and maybe potentially coming up, but on the 4-hour it's a bit easier to understand that we actually came above the 1.272, held it as support, held the 1414, got to the 1618, now currently rejecting that. So in 13 minutes time, if it does close like this is a sell candlestick pattern that we see previously to the left over here, and we can see what's happened afterwards. We have another one right over here. We see what happens afterwards. We have a quite similar one over here. We see that they continue down afterwards. So this is at a point of resistance being our targets. So all of these targets have now been met. We've got these final ones, and we should continue to these targets as long as we now maintain what was our resistance over here as support. So even if we come down as even below that point, technically speaking, you see this is our most recent higher low over here. We just need to hold above that, and that's sitting exactly on that 200 EMA, exactly on that 0.5 fib, exactly at $26,750. So maintain 26.75k. Even if we come down to that price point, we should still see the price of 30,000. However, as I've been saying for weeks and weeks on the channel, I believe that this is resistance. Okay, so if that changes, of course I'll let you guys know, but I do believe whether we continue up right now or come down and then continue up, we can see all of our targets would have been met at that point. And in fact, our final target is below 30,000, and 30,000 being right there, we can see that's within this purple box of resistance, and that's a psychological level where in the past this is where a lot of buying and selling took place. And if we scale out maybe to the daily time frame, we can see that previously this was once support over here. It actually was lost, came back in as resistance, had this big dump. We can see resistances over here as well. So if we do get a break through this level, we're seeing some seriously bullish signs. However, with the upcoming halving, we'd know that looking into the past, the last halving was May 11th, 2020. And if that's this day over here, yes, after the halving, we eventually went up. It took some months to consolidate within this area, but by the time it was October, so May all the way until October, we were, ranging in some sort of uptrend, but we only really got those moves in October. So many months later. And we can see before the halving, so the halving was about here, and we can see before the halving, leading up into it, we had a big dump off. So that is basically why, even though we're seeing the bullish divergence that is taking us up into this resistance, it doesn't mean that we're essentially reclaiming it. And as we know, the halving is coming, was it April, March or April? Sorry guys, I've completely forgotten now. It's either March or April this coming year. We know that we haven't had a mega dump this year. In fact, since the 1st of January right down here, we've only been in an uptrend, and that's been saved by this higher low over here, higher than this low. So you've got potential to continue this, but looking into the historical data showing us that price in the past, before the halvings, we do see quite a large dump, and of course this year alone we've only been in an uptrend, and right over here we've been starting to get some bearish divergences where we're seeing higher highs in price but actual lower highs in the momentum waves. Even as we scale up to higher time frames, I think we see similar things. I might be wrong, but yes, in fact, I am correct. So we can see that this is actually where we peaked. But down here, it's saying this is where we peaked. So we see the momentum coming down while price actually continuing up. So we're seeing basically disagreements, which are just divergences. So this is the telltale signal. As long as we maintain below, was it 31, 32K, we should still continue down and have a deeper correction that will eventually end below 24,000, coming back down more towards as low as it could come to 16,000. I've shown you in the past, but it's not a massive dump into there. There's a lot of points before that where we'd be looking for bounces. So for example, we have that CME gap between 19 and 21K. So that'd be a first set of targets. And if we were to pump up to here and eventually roll over to those targets, maybe we have this big relief rally. And if we're falling below this support over here and meeting these targets down here, eventually we have to pull back up to that previous support. But as you see to the left is resistance. So this way we could then eventually come even lower. We've got this point of interest right over here using the the fixed range volume profile, sorry, not VPVR. This is a fixed one, so you just set it on where you want it rather than the moving VPVR one. But yeah, that's essentially saying, look, where all the volume has been trading, where the most buying and selling happened was down here. And yes, it is true. Right now, we have been holding this upper blue level of previous resistance, now support, which is just another area where there was a lot of volume, but this is where the most is. So if in time, yeah, we are holding it right now, but if in time we come up, then eventually lose it, it's a signal that you should eventually come down to here. Now I can show you this previously. In the previous bull market, I sold all of my crypto here at 40,000. And if we use this fixed range volume profile, which I wasn't using back then, it's actually showing us that where the most buying and selling happened was at exactly 40,000. So it's basically saying if we lose this area, we're going to come to the lower end, which was right over here. And if that's lost, it's just space, isn't it? And then we eventually created this range over here, and it's basically saying the point of interest is down here. So it's basically saying that you could come down to 17,000 and you'd still technically be bullish. Only on the loss of that, we're coming to the lower end and then lose that, and then we're coming even lower. But as of now, we're coming up in the immediate short term with the potential for all of that still to come. We can invalidate it. All we need to do is break out of 30,000 and reclaim 32k, and then we've broken back up inside of this range, and then looking at 40,000 again, basically, guys. So there are some positives there if they do come, but the path that it's currently on, that's not really what should happen if we're going by the rules, as we are currently below a previous support of the bull market as resistance with multiple rejections at that area, followed by bearish divergences, which have played out since July. Technically it's since July, it's now October now, we have been going down. There is chances of invalidating it, but we're also seeing that 5-day time frame bearish divergence over here, and this is just appeared in July. So it has been coming down, but it never lost this support over here. So this is like your neckline. Lose this and you know what's coming, a big dump. But as of now, we're bouncing off of it. That's all good, well and good. But could this just be a lower high in this area after many months of coming down? Could this just be a lower high and then continuation lower? So I don't know what the title is going to be, whether it's a bullish title or not. Probably will be a bullish title because we're going up today. Maybe like, is Bitcoin going to 40k? But please do understand, if you've followed on along the video, if you've heard what's actually in the video, you'd know that right now, yes, we're going up, but just into resistances, as we've been trapped into this range bound market. And as long as it maintains as resistance, and if 24,000 is lost, we do have large targets to the downside that cannot be ignored. So please do prepare. I do think that looking at previous halvings, that we do get a very big dump off. We can even look back to how big this dump off was. Of course, we had the C word happen in 2020, and maybe that we don't take into consideration. But again, it was just before the halving, and technically, this is what we saw last time. It dumped 71% from that peak over there. But if we're ignoring the C dump, then we can go from here to where it actually bounced off. So a 54% dump now. If we're taking it from the top over here and we're looking at the CME gap as well as this, so that would be a 46% dump down to here. And then to the CME gap about 30. So not as nasty as last time, although this has been the longest bear market in history. The dump potentially won't be as nasty as last time, but as we've seen in the past, it does come round. So the expectation is, as we've only been in an uptrend this year in 2023, that we do need to dump off. But historical data shows that October is a very bullish month, and that's why you're seeing on the 2nd of October us pumping up. So could it be that we're setting the highs early in October, and then by the end of October leading into November, we do carry on with this dump? Please do like, subscribe, and definitely do share this update, because there was so much information that people need to be able to hear, so they are being prepared for whether it's the bullish or the bearish scenario. Me personally, I'm going to keep towards the bearish, as we are under that 2020, 2021 and 2022 support over here, our bull market support of 30,000, and it just seems as if after rejecting that area, we're just coming back up into it. Can we basically, the market makers are trying to find out, let's get up to that area. Will the bulls be strong enough to push it through, or will the bears basically take power again? And this is the next question that we're waiting for. So again, I'll catch you guys in the next one, but my expectation is that we top out around 30k, unless something drastic changes like a break of 30 and 32k. My expectation is eventual dump from this point. We would have to wait for this to be lost, but if it is lost, I'm expecting something along these lines over here. So that's pretty much it from me today. Don't forget to like, subscribe, comment and share to get this out to more like-minded people, and I'll catch you in the next one. Cheers.